All right. So I want to welcome everybody. Glad that you could be with us tonight. I'm going to be talking about a really simple strategy for trading gold, which is XAU USD. And in fact, it's so simple. You might even be disappointed when we're done. It's kind of like when I was younger, probably around 10 years old. I really got into doing magic tricks and stuff. And so, I'd perform, and whoever would let me perform, I'd do magic tricks. I even went to what was called the Magicians Guild in our city. And these were all professional magicians, and I got to perform a trick in front of them and stuff. So I loved it. But the thing about a magic trick is, when you're on the outside looking in, it's like, wow, that's really cool. And then you tell somebody how you do it, and it's like, oh, is that all there was to it? So once we make our way through this, you're going to say, so that's all there is to it. I mean, it's really simple. And that's exactly what I wanted it to be. I was looking for something. I'm enjoying learning how to use indicators and a lot of other kind of tools. But I really wanted something, number one, that would work. Number two, that was easy to teach and easy to learn. And something that actually, you could make some consistent money on. Something that people who are new and had been through the basics could be able to pick up on pretty easy. And so Luke Longmire is the one who taught me this strategy. He's kind of fine-tuned it since he first taught it to me. And so I'm passing it on to you. Now, this is a recording. So this is really for our team. And so I will have this available as a recording, probably tomorrow. But please don't share this with anybody else. But what you can do, because what we want to do is use this as a kind of a tool or an opportunity to say, hey, in our team, we're going to teach you a really, really simple strategy. And you'll have practiced it. Once they join, then you can share that link with them. But beforehand, I encourage you not to do that. Couple of basics right at the beginning is I want to encourage everybody to read the book, The Naked Trader. That's not why Cindy has the lights off in there. It's a great book. It's in the file section as a PDF, and you'll be able to. It's not going to really teach you, everything you need to know about trading. But what it does is it kind of gives you some basics on naked trading, which is trading without a lot of indicators, and just being able to look at the candles and get a sense of where the market's going to go next. So I encourage everybody to read that, number one. Number two is check out Christopher Derrick in, number one, The Power of Twin Trading in the IML Academy in the intermediate section, I believe. It's real simple. It's probably not more than 5 minutes long, but the Power of Twin Trading is just a very simple way of entering two trades at the same time. In this case, you're going to let one of them run to about 40 or 50 pips and close it. And the other one, you just let it keep going until it begins to turn around and take profit there. So you squeeze a few more pips out of it. And then look at Christopher Derrick on IML TV, because even though it's a little bit different for gold, the concept is there, and that is, this is all about trading from zone to zone, which we'll talk about a little bit more later. But you're just going from one zone to the next zone. You get in, you get out, you get your pips, and you're done for the day. So he does a great job of teaching on that concept. And so anybody who's doing this strategy needs to go watch an IML TV live or the recordings, Christopher Derrick. All right, so let's go through some basics first. These are just basic things you want to know ahead of time. We will finish with explaining exactly how the strategy works, and then we'll do a little bit of back testing, and I'll show you some examples of how it's worked in other places. I've been doing this for 2 or 3 weeks, maybe 3 weeks now. Luke has been doing it for, I'm not sure how long, at least since January. And I think his record is somewhere around, I'm going to say 48 wins and maybe 2 losses. So this is you see how consistent this particular strategy can be. So your goal for each one of these, I encourage everybody to write this stuff down, but your goal, oh, and by the way, let me go ahead and do the disclaimers, and that is, I'm not a professional trader. I am not an expert. I'm passing on a strategy that was taught to me. Trade at your own risk. Use good risk management. Past profits don't guarantee future results. All those disclaimers are heretofore given to all of you. So your goal here is per entry is between 40 and 50 pips. So you want to write that down, keep that in mind, 40 to 50 pips. The only difference between the 40 and 50 is you're going to check out the zone, your support and resistance zone, and see if it needs to be at least about 40 or to 50. So that's kind of the range for your support and resistance zones that we're going to work in. So your goal is about 50 pips per entry. You're going to take 2 entries. So that's at least 100 pips. Plus that second entry, you're going to let it ride a little bit longer until it exhausts all the pips you can out of it. So you're talking maybe 120 or more pips per trading day. Now, the days that we trade gold are going to be Monday night. So Monday, Tuesday, Wednesday, and Thursday. Can't do Friday night. Markets are closed. Not going to do Sunday or Monday morning typically. You're looking at Monday night through Thursday night. So you got at least potentially 400 to 500 pips in a week. All right. So again, this is basics. You guys know this stuff, but for those who are new, with this particular strategy, as with any other, let me move this over and get it out of my way. So you're going to start with the daily, get a sense of where's the momentum. Is this a downtrend? Is this an uptrend? You want to get the overall picture from the daily. Going to move from the daily to the 4-hour. In particular, we're going to notice the candles on the 4-hour. Watch what's happening there. And let's see. We're looking at the 4-hour. I'm going to zoom in just a little bit. Come back to some of that. So 4-hour, we're watching the price action with candles on the 4-hour. And but we're looking at the 1 hour for our actual entries. Okay, so daily get momentum, 4-hour get momentum. There's less fake outs on the 4-hour. We're looking for our entry on the 1 hour. And Luke originally suggested using the 14 EMA, the exponential moving average. And then he said, he just quit using it because people were getting confused about it. So that's up to you if you want to use one or not. He just simply used it as another confirmation. And that's about it. Just to know, are you on a downtrend? Are you on an uptrend based on where the candles are? If your candles are under the 14 EMA, then you're a little bit of a downtrend. If it's above that, it's moving up. Generally, you don't want to trade against momentum, but if you do, just make sure you have plenty of confirmations to go with it. We'll talk about those later. But it's best to try to trade with the momentum, but you can trade against the momentum. If you do, just make sure you've got plenty of confirmations to go with that. Now, your stop loss and take profit for gold in this particular strategy is you're going to, Luke said drawdown was about 20 pips about 90% of the time. Now, I don't know if he just meant that figuratively 90% or literally, and he tested it, but a large majority of the time you're going to get about a 20 pip drawdown. So we use between 40 and 50 pip stop loss. I'm usually doing at least 45, and that gives it some room to breathe. Your take profit is going to be 40 to 50, and so this is a 1-to-1 ratio here as stop loss and take profit. This potentially really has, you could get up to about 20% per day on your account using the strategy. That's what he's doing. I've been real conservative in my lot sizes at first. Do want to encourage every single person who's going to try this, start with demo, do demo a week or two, then move to a live account as soon as you feel ready, not when you're having no pressure from anywhere else. Let it be when you feel comfortable and confident that you're making these entries in a way that you can go to sleep. If you can go to sleep after you make an entry, then you're doing good. That's your criteria, that you're not worried about it the rest of the night and can't sleep because you might lose money. We're going to, don't trade 30 minutes before or 30 minutes after there's news. And again, I encourage you to go to forexfactory.com. You can see when the U.S. news is. And what I like to do is on Sundays, I'll go to Forex Factory and I'll just look and find the news that affects me depending on what I was trading. Right now, I'm just doing gold. But I would look for the U.S., any kind of U.S. news that might affect the market. And I just write it out in my calendar. You can't see it on here, but I have a big old honking calendar so I can see everything real clearly all at one time. I'm a big picture kind of guy. And so write it out so when those times are, so that it's just real easy to look at and you catch it and you remember it each day. I want to really, really encourage you. In fact, I'd say don't trade gold unless you've got a trading journal. Do not do this without a trading journal. I did not realize the mistakes I was making until I started writing down every trade that I took, why I took it, what were the confirmations that I used, and what were the results. Because I got lucky a few times, and then there was a few times I realized I just jumped into this. I didn't have any confirmations. It was an impulsive, because I wanted to catch the move, and so I jumped into something, and that's a sure way to lose money. You'll start seeing your own weaknesses when you start writing stuff down in the trading journal. So be sure and do that when you're trading gold. You're just going to write that information down, write your confirmations down, why you got into it, and what was the result the next day or the next few hours. I also want to encourage you to write down the rules for this in a notebook or something that you put beside your computer or wherever it is that you trade, so that you can reference it. Because sometimes I think I've got something, and then a couple of days later I've forgotten some of the important details. So what I've done is I wrote down my trading rules. What is my trading plan? How am I going to do this? What do I have to watch each time? And I wrote it down so that every single time I get ready to trade gold, I pull this up and look at it first. So it's kind of your own personal little trading boundaries and reminders. This is all about trading less and not more. It's about trading less and not more. So this is is what frees you up in a really simple plan. For instance, this is what I understand now. Luke Longmire, he only does this strategy now, even though he taught, or maybe he still teaches about some cryptocurrency stuff. He doesn't trade anything but gold now, and he just does this one strategy, and he's making a really good amount of money just in this one thing. So don't think that you have to master everything, especially at the beginning. Pick the thing about that I love about this, for those who are watching, some of these folks I've already talked to about this, but maybe you're new, is picking one thing like this. You begin to see, you begin to learn. I think it was a Daisy Duncan in the basics course that said pick one, maybe she said two or three, and just learn those until you start to get a sense of really even the personality of some of these pairs. I think Cindy and I were talking the other day, and gold has a personality. You start to see how it moves and how it's different maybe than other pairs, because like particularly in this one, gold doesn't have as many pullbacks as say some other pair. So it'll often just like blast through when it starts to move. It'll be in consolidation, then it'll blast through a couple hundred pips before it stops and has a pullback, or it has a really small pullback. So it has a personality that's a little different. And there's a beauty in learning one of these and getting a feel for it and practicing on one until you kind of master it before moving on to other stuff. I wish somebody had told me at the beginning, do it like this. Start with something simple, learn it, become somewhat of an expert, and then grow from there and add on the other stuff later. In particular, I'm using the exit manager. Contact me, or in our group, you can ask about it. The exit manager is a great tool, but if you're going to use the exit manager in this, the thing you need to know is that with gold, when you're, say you were going to put 50 pips in, you have to add a 0 to it in order for it to work on the exit manager, because of the way the pips, numbers, and so forth work with gold. So instead of putting 50 pips or 40 pips, you're going to put 500 or 400. So you have to add a 0 to whatever it is that you normally use for your take profits and so forth in your exit manager. All right, so let's get to the how-to. The how-to is really easy. So first of all, you're going to go to your chart, and now you guys can see, let's see if I can see. All right, you see right here, let's see if I can get this to move. All right, I'm not getting it to move. So in your imagination, that you won't, this particular strategy probably works on other time frames. So, but the way he teaches it is it works. Did somebody have a question there? All right. So the way that this works is you're going to look for the 7 p.m. Central Standard Time. You're gonna, which is the 3 GMT on this MT4. It says 3 GMT, and you're going to create a vertical line right there, and that becomes your starting point for the night. Now, I don't know if, because I haven't tried it that much on other time frames yet, so I don't know how it works. And I encourage some other folks to experiment with that or back test it or whatever. But and it may be that it works on this time frame simply because, there's a close of transition of market from one time to another. It seems to be that it consolidates real a lot. I was just checking to see because I didn't want to miss a trade on this myself. It may be that it just seems to consistently consolidate at this time of the night. I'm not sure, but we're going to start to teach you the way I was taught, and that is you're going to start this at 7 p.m. Central Standard Time or 3 GMT. You can draw a vertical line right there, and that becomes the starting point of the rest of your trading for that evening. Next is really, really simple, and that is you're going to go to right up here where these magnifying glasses are to the left here. If you click on that, it gives you your lines instead of candles. Those are the candles. Here's your bars. I've never used those. They're probably just as good. They're just not, they don't look cool to me, so they got eliminated. Candlesticks is what most of us use. Here's your line chart. And the simple thing that we're doing here is you're going to go over here to insert shapes, rectangle, and you're going to create a zone right here. It's the nearest zone above or the nearest resistance above and the nearest support below. Okay? So, and the way that you can see that is where these sharp lines are, where these major shifts happen. The next one looks like it's going to be right there. Bring that over. All right. That's your only support and resistance that you need to worry about. You don't have to do the whole support resistance thing for the whole, the entire chart. You don't have to do a lot of indicators. You don't. The only thing you're looking at is the closest one above and the closest one below that are your support and your resistance. Okay. Now I'm going to switch back to candles because you do want to include, unless they're really long like this one here, you do want to include the wicks in this because your wicks are, Cindy and I talked about this as well. In the book, he talks about zones instead of lines. The thing about lines is we create lines and we create hard lines. What zones do is they're like beer bellies, right? They're squishy on the outside and you push them in a little bit until they get to a hard part. Not that I know anything about these personally, but I've heard that that's how a beer belly works. So you want to give that little bit of room there for it to wiggle, and the same way here. You've got a little bit of a zone there. All right. So what happens next? Let me move this. You probably can't see it, but I can. We're waiting now to see. Really, really simple. This is how this works. Now, because gold doesn't tend to, Christopher Derrick, when he talks about trading zone to zone, what he does is he teaches about the retrace. So it will, let's say it goes up, it'll retrace, it'll do a retrace, it will retest rather, and then keep going. So you get in on the retest. Gold doesn't retest as much. So you see what it's doing right here. No matter where we are in this support and resistance, you're not trading inside this box. You're never going to make a trade. You're not going to make a trade if it's halfway, not if it's at the top here and goes down, not if it's here and it's going up. You're not going to trade inside this box at all. You're going to wait until a candle breaks this zone or this zone. And when I say break, it doesn't mean wick, but it should, it should close above the resistance or below the support. Once your candle closes above or below, that's when you enter the trade. That's how simple this is. And this is the part where the magic trick, you go, is that all? Yes, that's pretty much the whole thing. Once it breaks your zone, And again, it's not just the wick, but you have a closing candle. Now, if it's a real big bearish thing that's really going, I'm tempted to get in, but I suggest waiting until you have these closed past your zone. Then you're going to enter two twin trades. You're going to enter two is either sell or buy, and you're going to make money. You're gonna have approximately, you're gonna go 45 pip to 50 stop loss, 50 pip, 45 to 50 pip on the what am I trying to say? Take profit, and then you let it do its thing. Now you also want to look for, this is where you're going to look for your confirmations. So that's your main confirmation. It broke the zone. I need to get into this trade. The only other thing that you want to think about is watching and learning these candles and how they work. You've got these kind of candles right here. What are they? Why are they doing what they're doing? What kind of candle is this? What's the indication here? Probably what's going to happen. You're looking for indecision candles. You're looking for dojis. You're looking for vectors. You're looking for, this is where the understanding how the candles work, where the naked trader can be helpful for you as a secondary confirmation beyond that it closed out here. This is also where you would look for, is it on a trend line? And, is this something that, would it retest this? Is this something that's going to come down to a trend line and then bounce back up and maybe not get as many pips as you thought? Or you can use the 14 EMA, like right here. You see it broke it, and now it's I'm not sure what it's going to do, but it looks like it could retest. It's going up to this point and possibly could go back down again. So those kind of things, any kind of confirmation that you've learned through IML Academy, you've learned in your other trading educational experience, write those down in your journal. But the simplicity of it is you're waiting for it to break the zone. And it's just because apparently this is the way gold tends to work. Now, what the thing I don't like, if I had something I could tell you that I don't like about this particular strategy, and that is, as it is presently doing it during this time period. Like right now, it very well we could get into a trade, depending on what this candle does. And if it closes past the zone, we could get into something pretty quick, just a couple hours after after we started our trading session tonight. Sometimes it takes hours and hours, and I am just not staying up till 2 o'clock in the morning staring at a screen. I don't mind it, but I just can't do it. I keep falling asleep or want to fall asleep. So one of the things that he said was, if that's the case, if it's getting late, you've watched TV and you keep checking, you watch it and you keep checking, and it's really taking a long time, it's consolidating, it's moving sideways, what you can do is drop down about 20 pips from your zone. So about 20 pips from your zone, and do a buy or sell stop, or on the top doing a buy stop. So that after you go to sleep, it gives it a little bit room in case it's one of these just wicks that long, and it kind of more guarantees that it's really broken through, and it'll activate that while you're asleep that night and make your money that way. Okay, so you can, if you're not watching it, you can't watch it, whatever, then you can put in a buy stop or a sell stop about 20 pips above or below for that to work for you. So let's go back. Now, again, not a lot of indicators, not a lot of crazy stuff, cool stuff. In fact, if you've learned a lot of other stuff, you can use that for confirmations. You can, if you want to use a Fibonacci, you can use that for some confirmation maybe. But generally speaking, this is really, really simple. Support, resistance, you're waiting for it to break. That's it. And the temptation is, and that's why I think you need to do this on demo, because the temptation is, because people are used to doing so many other things, you won't trust that it's this easy. You know what I mean? So do it on demo until you develop some trust. And will you win every trade? No, I'm sure you won't. The only time I've lost one, though, so far has been when I've jumped in before I followed my rules and did what I was supposed to do. So learn to do it on demo, trust the strategy, and see how it works for you. So let's move this back over here. Let's go back a little bit and look at some examples. Not sure how far back I went. So if you see here, so this was the candle, is the 3 GMT at 7 p.m. Central Standard Time, 8 p.m. Eastern, etc. You mark your candle, find the nearest resistance and support, and then you wait. You let the trade come to you. You're not trying to make something happen. You're responding to what it's already doing. So it came down here. It looked like it could have broken through here, but it didn't. Wick here. That says it tried to go down to this level, but it couldn't. It closed a little higher. Your next candle is bullish, goes up, boom, breaks through here. I can't see because of I got stuff up there, but I want to say this one would have been a little bit shorter. If you got in here, it would have been a smaller trade. Said I can't see, but I'm going to say it's probably close to, let's say if you held it to there. It's about 40 pips. Real simple. Broke, you enter, hold it for this one 40 pips, and you're done. Over here, 3 GMT. It was kind of right on the line there. You do the up here, your near support resistance. Now you can't see it, but I had to, when I set this up, I did do a support line. I did draw a line that went, I'm pointing with my finger like you can see it. But I did do a line to help with that further over to where it matched up the resistance, the resistance somewhere else. So you can do that, but you're looking for the nearest support resistance. Broke through here. Could have got in on the retest, or you could have got in as soon as that closed. We'll just say right here, you're looking at 136 pips. Next day, or next trading day, I mark here. Same time period. Draw your zones. This one would have been a little tricky because, it was a lot of indecision right here in the zone. So it would depend if you would have gotten in, depending on how you drew these lines, if you would have gotten in, here, that could have been, or we'll just drop it down a little bit. That's 62 pips. One more. Here's where we started. Wait for it. Create your zones. Broke through. Even if you started at the close up there, 84 pips. It's a really consistent in that time period strategy. So I'm going to Let's see here. I'm going to try to unmute everybody. Find. Or let's do it this way. If you have, let's try it like this. If you have a question, unmute yourself and then ask a question. And I don't know that I'll have the answer, but at least I'll give it a shot. By the way, Luke also does a Telegram channel. You'll have to, if you use the search bar in the Wealth for All group, you'll be able to look it up and you can join that Telegram. He doesn't give a lot of information in it. He'll put up a chart and kind of give some basic, but he's not calling out trades, but he does give some basic direction, encouragement. So that's an additional way of confirmation, if you like. All right, so Cindy, it looks like you're unmuted. Did you have a question?
Your when you drew your zones, like the last two, the thing that always confused me, even when I watched Luke, the support and resistance. Now I know the top is obviously resistance. How do you get the bottom to be support? Isn't that resistance too, or does it matter? It doesn't matter?
I'm not sure I'm understanding your question, but it is support. Support is kind of the same thing as resistance. It's just resistance at the bottom instead of at the top. But how do you the way to find it, in particular with this strategy, you're looking for a zone that's at least probably 40 pips wide. So if it's real narrow, then that's probably not a big enough zone.
Okay.
But you're looking for usually the nearest, like right here ends up being the nearest support. So this is where it wicked up over and over again here, and so I just create a zone. Then again, if you look at the lines, see that point right there?
Yeah.
So you use those points as reversal areas. You realize that it's come up to this point in several times, because you can look back at other places how it's done that. But once you go back to candles, I want to include that wick right there as part of that zone. So there is a little bit of personal choice that happens when you're figuring out, your zones. It's not an exact science. You're sort of doing it out of learning and habit. And I've done this a bunch of times, and I think this is the way it should be. I mean, that it's not exact science. That's the word I was looking for.
I think I've been making mine too big. I would have probably put it down here, where the red down to the next level. Yeah. And then it would have never came down there. So I like that. I just was, that would have been where my support, and then my resistance would have been up there. And that the thing in the middle, I don't know, I just would have looked at that as a drawback or something.
Yeah, this is an area of, it could be a support resistance area, but you're looking for, in this particular strategy, you're looking for one that's close to, and that way, and so you're creating that zone. So like once this candle right here, if it closes down here, I'll be getting into this trade. Now it may do a pullback and come back here. That's why you got that 45 pips as your 45 to 50. That's your stop loss. But I'm going to wait for that. It'll close down here, and then I'll enter into two trades. Now, do also, if you're thinking about lot sizes, you can find this in the group, but there's a, yeah, you probably have to find it in the group. It's like myfxbook.com Forex calculator, yada, yada. But that Forex calculator that we have listed in the group is just a real easy way to put in, what your stop loss is going to be, what pair you're doing, and what risk you want. It calculates the size, the lot size you need to be using. So
Okay.
if you're using like hypothetically a 0.8, see it's breaking that zone here. Now just because it's
Yay.
breaking it doesn't mean I'm jumping in it right now, because it hasn't closed yet. Because it could come all the way back and close inside here. So, but it's looking pretty strong.
I know.
This is the part where
Ah,
all those like, what should I do? Should I be patient? Yes, you should be patient. Which is why trading is a mental thing more than it is anything else. So wisdom dictates wait until this closes. But I would guess that if this closes past there, let's say it closed there. I mean, it will probably go, that's about 60 pips. It'll probably eventually get about 60 pips out of it. Okay, so Josh, did you have a question?
Yes. Did I catch you correctly at the beginning? You said the analysis for this is strictly on the H1, the 1 hour chart?
Well,
I understand you started with daily and broke down to H4 and then H1, but are you marking your zones on the H1?
I supposedly it's best to mark them first on, hold on, let me move this out of the way. I do my zones personally. I do them on the 1 hour chart. Then I compare that because it's a little more detailed, where I can get the wicks a little bit more accurately. It's going to be the same ultimately, but it's a little bit more detailed, in my opinion, on the 1 hour. Now,
Okay.
that doesn't mean you can't look at other time frames. The 30 minutes, you can go down to the 30-minute and get a sense of what's happening there.
Okay, I had one more question if you have a second.
Okay.
And that is when you're marking that zone at 3 a.m. GMT for the start of the trading period, it looked like, if you're on the 1 hour chart, most of the zones that you showed for analyzing those trades are only a few hours after that. So is it a strictly USA evening hours strategy, or is this not a valid strategy, morning hours, or so on?
Yeah, that's a great question. It's one that I don't have the answer to yet. I have not. I've back tested it some on this particular time frame, which is the 3 GMT, but it's 7 p.m. Central Standard Time. So whatever that is on your, I don't yet know about how all those GMT and all that kind of stuff works. I just know.
So are you personally only trading this in the evening your time?
Right now, I am correct.
Okay.
And the beauty of it is because as simple as it is, I don't have to sit here and stare at a screen for 4 hours. I can keep it in view while I'm doing other things because I'm only looking for it to do one basic thing in order to get into a trade. So 7 p.m. I turn it on. Eventually what I want to do personally is I want to figure out how to do it during the day and find a good time to do it during the day, because for me, it's a better trading time. But for now, the way that I know to teach it is the way it was taught me, and that is at 7 p.m. Central Standard Time. And again, you can put in your buy stop and sell stops if it's, you've got to go to bed, you don't want to deal with it anymore. I've done that several times, and it's worked for me. So,
Thank
other
you.
questions? All right, guys.
I got one.
I've got a
one.
go ahead.
Hi, Tom.
Hey, I kind of piggyback on what Cindy was asking. Well, actually, first of all, just to confirm, so your zones you're drawing between the top and the bottom is generally going to be a 40 to 50 pip range, correct? More or less?
Yeah, you're looking for like this one. Let's see what it is. That's about, yeah. I mean, if I was to go from, let me try it again. I was going from here to here, you're right at 47 pips. So
is that like one of your basic trading rules, always to stay within that range?
It is Luke's rule.
Okay. Okay.
I don't know that it has a particular, rooted in some kind of Forex rule of some kind. It's just generally for this to work, because what you could do, you could draw something really small, like here to here, and that's only just a few pips. Again, some of this is at your own discretion, but that's 20 something pips, which is really not, you're not getting probably real support resistance zones.
Well, let me add to that, because I understood Cindy's kind of confusion. To me, on this area, the top bar is at a resistance ceiling point.
Right.
The bottom one, to me, if you go over right around here, it's another ceiling resistance point. To me, that's not a support, at least from what I've learned through IML.
Well,
so
let's call it a zone then, if you're
okay,
more comfortable with that. So we're trading from zone to zone.
Okay.
So that's Christopher Derrick's method. You're trading from zone to zone. But you can see, probably if we went back, you would see that there were times when this came down here and didn't break through and went back up again. It was probably a support at some point. This was a resistance. This could be a floor for something else in a bigger picture if we expanded it out.
Right.
So don't think of support's not like at the very bottom of the chart, and resistance is like the very top. You just think of these as zones of support. You see here, this was a resistance, right? It went up at resistance. But these candles, it's resistance. If this comes down and goes back up, then this became support for these candles.
Right.
Right. But you're really, you can just call it zone to zone if it's easier.
Well, right. But you're generally drawing your zones as you wait for this kind of 7 p.m. Central Time bar here, and you're that's one of your first steps, figure out where to draw your zones.
Right.
You've got them pulled over to the right here to be able to see, to give a visual to see where they're going to go.
Right.
But you're starting here and kind of looking for a top or a bottom with that kind of 40, 50 pip gap looking back.
Right.
Right. Okay.
Yeah. So once you isolate this candle, then I go to the line charts.
Right.
I want to go back to see where was the previous points of reversal or resistance or support.
Right.
That are major. And you see, this one could be, you could count that, but it's awfully close. It's really not a major or a big.
Right.
This one, these tend to be up here. This tends to be down here.
Well, yeah. And again, if you do that, that's kind of where, if you're looking in that kind of 40 to 50 pip range of those zones, that can help you pick those spots.
Right.
Basically. Right. Okay.
Yeah. If it's too close together, then you're really not getting a sense of a zone for it to break through.
Right.
So.
Okay.
I hear money.
Hey, Chuck, quick question.
Yes, sir. I'll be glad to have you help me answer
it. So, okay, given the specific example that we're looking at right now, the live chart, let's say that current red candle does close below the white marked zone, okay? How would you personally feel about entering a sell at that point, given the zigzagginess you have just to your left there?
You mean as it is like right now?
right this second, because you see that little bit of consolidation the previous time I was in that area, and what do you got, like a 10-15 pip zone there? It's not very big.
Right. Yeah, there's the history of this over here. You see how it wicks a lot on this side. It's doing the same thing here. So I would, if this closed with a solid candle down to here, I'd feel pretty good about it. But being like, if it closed right now where it is, I'm still not in the trade yet.
Well, what I mean about that is, okay, it does close on the other side, right? You got a good solid candle through the zone, but that little consolidating point right there with those 1, 2, 3, 4, 5, 6, 7 candles or so, 8 candles there. Mm-hmm. Look at the bottom of those candles creating another potential support, and that's just kind of a really small zone. Would you be thinking, should I or shouldn't I?
That could be something that you want to consider that a good trader would look at, like you, and would look at and as a, what should I do? Personally, because of the way I've just seen it, the history of it, if it closed down here, I'd do it.
All right.
Because even if you get a little bit of pullback here, I think it's still going to be a strong 50 pip win on the trade. Again, it's really, I try not to make it too complicated, but yeah, I mean, that's wise to look at. You see, it's kind of an indecision area. That's why I definitely not jump in on the wick. I'd wait until it was a solid. But after that, I'd be in it personally. I'll let you know tomorrow. All right, is that simple? You guys, you see, the hard part of this is to kind of unlearn everything that we were taught. Not that what we were taught is bad. I don't mean that, but the over analyzing at the beginning. That's what I started doing. I was like, well, he's doing it real simple, but I know some stuff, so I'm gonna throw some Fibonacci, and I'm gonna draw all these lines and do this stuff. And I found, the first few times I was doing this, I was still winning trades, but I wasn't winning as many as the rest of them were, that Luke was, and some of the ones he's mentoring, simply because of the fact that I was overcomplicating it. And so I started learning to trust the strategy. That's why I encourage you, again, to do this do it on demo. Okay, we're gonna. Yes, just a second.
One question.
I hear who is that?
It's me. It's Cindy.
Okay. Yes.
Okay, if you got into this trade, and I know you're going to take your profit at like 40 or 50 pips, but you're doing 2, and say you're going to sleep.
Okay.
Do you set your second profit? I know you said to let it run, but would you set it like at the bottom of the next zone down here? Or would you what would you do? Let it run all night?
No, I would, because I use the exit manager. I don't have that problem.
Oh, okay.
So, but if you're going to do, I would just do, if you're going to go to bed doing it that way, I'd probably only do 1 and set your take profits and your stop losses just like a regular trade.
Okay.
An exit manager. If you can't, watch and manage it. If you do have the exit manager, then I say use it and take advantage of that, because you can use different. There's different ways to use the exit manager that are really good.
So your exit manager, do you set that for another 40 or 50 pips? The second trade?
No, I set them for the same. Actually, and Josh may have a better way of doing this, because I see he uses the exit manager. I think Tom uses the exit manager. I use the, what's it called? Fractal.
Trailing?
Fractal trailing, yeah. And let it do its thing.
Okay.
Eventually, with the exit manager, you might, I haven't experimented with it yet for that. You could do just 1 trade and just let the fractal stop do its thing with that and just do a full, however big your lot size is going to be. Remember, you're going to split your lot size. If your normal lot size is, $1, you're going to split that up into two, 50 cents each. You're not going to double your amount that you're spending here or risking here. You're going to use wise risk management, split that in half, turn it into two different lot sizes and trades according to that. But with exit manager, it's possible you could get, I don't know. I'll have to experiment with that. I'll let you know.
Hey Chuck, I've got a quick question for you.
Yes, sir. How you doing, buddy?
Or actually a couple of questions. So we're placing trades on the hourly chart, right? Not the 30-minute?
Correct.
Okay, gotcha.
Yeah, I'm sorry. We flipped back here for just an example, but.
All right, cool. And so if we're looking for, so let's look at this live, and if that candle were to close below that zone, you're looking to put in a sell, right?
Correct.
All right, awesome. And there was another example. Can you scroll back a little bit? There was one example where there was like a lot of drawback, and I just wanted to clarify that. Keep going. Yeah, it was that middle one there.
This one here?
No, the one on the right, above that.
Up here?
Yeah, that one. So if we had gotten in, or actually, would you have gotten in on that green, on that bull candle there?
Yeah, this one is one of those that where you're, let's say it's hard to, this, I don't remember taking this particular one, so I don't know what I would have done in real life. Okay. But, let's say I was really brave and I said, you know what, I think this one's good enough for me, hypothetically. You're at about 49 pips there, but then you've got 71 pips here. So that's your 50 pip stop loss would have protected you in this one, in this particular case. Or maybe you got in over here, you waited until this closed. If you wait until this closed, you might not have gotten, let's say it was here. You're still 48 or 50 pips here.
Okay, so that probably would have been the safer thing.
Yeah, this would have been the safe bet. It broke the zone. It closed outside. I hate that personally that it was such a big candle because it's eating up my. I want it to close right about here so I can I can take those pips too, but still ended up being almost 50 pips even from there. So
gotcha. Awesome.
It seems like gold tends to move in waves of about 40 to 50 pips, which is why I think this works the way it does.
Okay, awesome.
And again,
that's 3 GMT, right?
Yes. Which is
cool.
Where are you?
I'm in California.
Okay. Is that Pacific?
Yep.
So it's 5 o'clock, I believe. 7 o'clock Central, 5 o'clock. I think you're 2 hours before me.
Yeah, I think so. Yeah, I think that's right. Okay. Awesome. Cool. Well, thanks, Chuck. Appreciate it.
Yeah. All right, guys. I think we should probably quit here. We've been a little over an hour.
Got a real quick note, Chuck, on the time since you're on the topic.
Okay. Yeah, please.
We do daylight savings time. GMT zone does not. So it's easy to say 5 o'clock Pacific time right now, 7 o'clock Central, but when that time shifts and theirs doesn't, you just might have to adjust. Just keep that in mind.
Yeah, that's okay. However that works, I have no idea. And for those who are watching this, I know at the beginning I tried to move this here. I don't know if it was set on the 2 or the 3. I think it looked like it was on the 2, but it may just be because it closed. That's an hour long, and maybe it's 2 to 3. I'm not sure, but so this line here may be over 1. I can't really see it, but yeah, you're looking for 7 p.m. right now, 7 p.m. Central Standard Time. Figure it out based on your time zone beyond that, and And I think he calls it the 3 GMT is what shows up down at the bottom. All right, guys. Thank you.
Thank you.
You can message questions and stuff. I encourage you again. I'll record this. I'll upload it. I'll do a private or a unlisted YouTube link. You're free to use it with new people. I wouldn't share it outside of customers who are in our group. And happy pipping. Go make some money. Let's see how this thing works. See you guys.
Bye. Thank you.
Bye-bye.
Have a good night.
You too.